In this video, we're going to talk about measuring retracements in trends. Handy one for getting on board those that you think you've missed. Stay tuned. Hey traders, a very warm welcome to you. Okay, so picture the scenario. You've seen a market or you've been watching a market and it is very clearly trending. It's a lovely uptrend, it's a lovely downtrend, and you know you want to get on board the trend. Now, perhaps you've missed that first initial impulse move back that we talked about before, like a bull flag or initial kind of slight little quiver back against the trend that's exploded back up again. But now this thing is chugging. It's chugging along and you know you want to get long, or you're already long and you want to add to the position. Now, we should be aware that we don't want to start chasing trends. We do not want to be just buying blindly because, as you know, and as I know, trends do pull back, and they pull back pretty deeply at times, and they test people and they shake out people and they do this and they have little bits of bad news and good news before they carry on marching off again back up and the standard kind of move that they were before. Little blips, minor blips, shallow blips. Anyway, how do we measure retracements in trends to help us get on board? That's really what we're looking to do. So there's a couple of ways that we can measure things and put them into perspective of the initial drive. That's the key to it. You know, very often people say, okay, well, you know, it's going to be this amount, but you really need to put it into perspective of how much we've moved. So using a percentage helps us do that. Some of the key levels that we want to look at for just standard percentage retracements in this category here are, first one, 33%. So 33% off the high. I'll draw a chart in a second to illustrate this. Then the second is 50%. Very, very often this happens, especially in the initial kind of trend move. You'll get a 50% retracement of the trend, then carries on. Now, I'm well aware that we have trends that are very, very chugging and you very rarely get these kind of moves, but there are often markets where you will get this kind of retracement before it continues. And even a retracement kind of 50% off the high, holding, pushing on again, you know, will give you a reasonable entry a lot of the time. So 33%, 50%, and then 2/3. Now, I'm going to say that this, be cautious of this. In fact, let's get a red pen out for this. I'm going to say be very careful about trading this. I know that the textbook is kind of saying, hey, it's still a trend if it's retraced 66% of the move, but I'm a bit nervous about that personally. If I see something retracing all that way past this half point, that's when I start to think, oh, you know what? I don't think I'll buy it there. However, let's just put this out there. If it does retrace to that 66% and then kind of decides to push back up, I might buy it before we kind of breach the high above that 50% zone, above that 33% zone. I might think that's a good place to buy it. Another way we can look at it is old Fibonacci. 38%, 62%. Now you can see there's a bit of a little bit of similarity here. So we can probably put these two together, 33% with 38%. So in that zone is a nice place to buy in an uptrend. And then we've got 62, 66. That's for those deeper retracements. Let's put some stuff up on the chart and let's see exactly how that would look if we were going to trade that for real. I'm going to say here what we've got here, 33%. So we have a good drive pushing up. You know, we pull back, and if we say that that's the high there, and then we say, I'm just going to visualize, do this here, a third here, and a third here. So first third, second third, final third, 33% from the high. That looks visually still like it's a good trend. So it's a good place to kind of start looking between that fib level that we talked about and here. This is not a bad level for your first buy zone. So if you see a trend and you want to get on board it, that's not a bad level to go. Okay, 50%, we're talking around here now for our 50%, a little bit lower. That's still okay. It's still pretty feasible. 66%, like I say, I'm a bit nervous about buying that. I know we do see a lot of markets that do retrace that and carry on, but I'd rather buy that on the test and then subsequently move. I think the best one out of all these is that third level, around the 30 to 40%, 30 to 40%. I know we can use the fib or we can use this percentage retracement here, but I think that's the sweet spot for me for buying a retracement in a trend or selling a retracement in an uptrend. And what would I do? How would I manage that? And how would you manage this? Comments in the comment section below how you would do it. I would use this as a zone of kind of an area that I want to do business. I would say, you know what? this is where I'm interested, between that 30 to 40% zone. Let's put it up here, 30 to 40%, oopsie daisy, 40% retracement zone is where I'm interested in buying this uptrend. I don't want to chase it too high. If it carries on, fine, but this is where I like it. It's a healthy retracement. It's kind of done the first unwinding, and if it's a genuine trend, we're going to chug back up and push through the highs, and my target's going to be, maybe if I'm feeling a little bit cautious, I might scale a bit at that high, but ultimately, probably not. If I'm looking for a multi-month move, whatever it may be, I'm going to hold it for a subsequent move. However, let's go back to what we're talking about. This fuzzy zone, if you like, or zone of error to do business, 30 to 40% of the initial move. Now, within that window, I personally would want to see some kind of price action. I would like to see something that gives me the nudge. So let's just clear this off and let's just run through perhaps something we could see there. Now, that's not for everybody. I know people who will literally just pull the trigger there and be very happy with it. And if you're a swing trader, it makes perfect sense. You might pull the trigger there and your stop might be down here, or you might even have a really low stop. Or if you're investing, for example, your stop's obviously going to be the amount that you're investing in that specific asset. But for me, price action guy, I like to see a little bit more kind of nudge to say, yes, I've got my zone of area to do business. Now I'm going to look for something. Now that's either going to be some support that comes in, and we start to see some support within that zone. So imagine now these are the patterns that we see within that zone. That could be even something like we've got a red candle, and then I get, if I got a green hit nearby, I'm not sure how much ink we've got in this. Oh yeah, perfect. And then I see a bullish engulfing. That would be something that would be quite nice to go in there. Gives me just the trigger to say, you know what, take it. You've got the area that likely is going to hold, likely going to find some buyers around. Okay, support, that allows me to frame the trade. I can put my stop under here. Oh, a bullish engulfing, that allows me to frame the trade and put my stop under here, or anything else like that. Perhaps a little mini range. Perhaps we get into a little mini range. We fake out to the downside and then we push back up through. I'm all on that. I like that. I'm long. I've got my stop below that little fake out low, and I'm within the uptrend, and I'm within that 30 to 40% sweet spot. That seems good to me. So just ideas really on measuring the retracement in trends. I know there's a lot of stuff out there is trending quite nicely, and this is a good way of not chasing it, because you say, you know what, it can go as far as it wants. I'm waiting for this 30% pullback area, and you can set an alert, and every evening or every couple of days you can move your kind of alert line up, and you don't have to worry about it too much. I'm sure perhaps some platforms will allow you to even use 30% off highs alert, and you can screen with it on FinViz or something like that. But at least then, once you're aware of it, you don't chase it, you know the level you want to get interested in, and then you've got the two choices. You either pull the trigger straight away when it hits some level there, or you look for some kind of price action pattern that might suggest a reversal is happening, but within the broad sense of the trend. Anyway, comments in the comment section below how you like to measure your retracements in bigger trends, and also what you think about adding an extra layer of confirmation from price action or from some pattern, chart pattern within the broader pattern to get onto the trend. All right, guys, thumbs up if you like this kind of stuff. See you in the next one. Take care. Good trading. Bye-bye.